Hey, what's up guys? I'm Cody Charnell, investor and multifamily real estate broker here in Long Beach. And today we're going to be checking out this recently closed triplex. It's located in the city of Lawndale, and I think this deal is a great example of what you could invest in if you're just starting out in multifamily investing, or if you're looking for a property to do a house hack on, where you can live in one unit and offset your mortgage payments by renting out the other units. So I hope you enjoy it. If you get any value of this, I would appreciate it if you could drop me a like and a subscribe. And without further ado, let's get into it. All right, so we're starting out with the listing here. So the property address is 4418 West 163rd Street. And like I mentioned, located in the city of Lawndale, and we'll take a closer look at the location in just a minute. 3 units with a total square footage of 2250, or total of 2250 square feet. This one was on the market for 17 days, and it ended up closing for 1.1 million, even though their initial asking price was just 975,000. So this one closed well over the asking price. So probably a competitive deal. So this property has 3 2-bed, 1-bath units and 3 single-car garages. And if we scroll down here, we can see the unit mix and rents. So you have your 3 units. It looks like all 3 are occupied right now, and tenants are currently paying $1,800, $1,400, and $1,475. There is quite a bit of upside in these rents. And if we take a look at the property here, you can see a little bit more about the condition and how it's laid out. So it looks like probably a duplex in the front here. You see 1 door here and 1 door here, 2 electric meters. See the front yard there. Some good things I'm noticing. It looks like this one does have vinyl windows. This is a 1960s built triplex. So 1960s, oftentimes you had aluminum or wooden windows originally. So this looks like the windows have been upgraded, which is a good sign. Here's that second unit in the front building. Also has updated windows. Stucco looks like it's in good shape. Here we can see the back building. So you have the 3 1-car garages on the first floor, unit upstairs. This is looking back down the driveway out towards the street. And this is the little park right across the street, which we can check out in a second here. So no photos of the interiors, which isn't uncommon. With multifamily investment properties like this, sometimes you don't get any photos of the interior before you're making an offer. And you're really making an offer based on the numbers. So because these rents are low, I'm assuming that the tenants that are in these units now have lived there for a long time. So units may or may not be upgraded. I think whoever buys this is probably going to want to capture that upside in rent. So turning over these units, re-renting them, or even moving into one of the units to do the house hack is probably what's going to happen. There's also potential on this one to convert those garages. So these garages could be converted into an ADU as long as the ceiling is high enough. So with tuck under parking like this, that's usually the constraining feature. Some people who are familiar with investing in LA might be looking at this and saying, oh no, this is a soft story building. So anytime you have a building with an overhang like this, if you're in the city of LA, you may be subject to a soft story retrofit, which is where the city actually makes you do an earthquake retrofit on these types of buildings. I believe these are called dingbats. Anytime there's living space that overhangs like this without any structural support. So in the city of Lawndale, you're not required to do that. So you don't have to worry about retrofitting this. It's also just for larger buildings with more units than this. This is just a triplex, so you wouldn't be subject to those LA City retrofit requirements, which is a good thing. But this unit upstairs, I was just looking at the tax records. So tax records actually break down the square footage by structure. So you can see this is building 1 of 2, as it shows here. You can see 2 units, 4 beds, 2 baths. So this is going to be that duplex in the front that we saw. The total square footage for this structure is 1,500 square feet. So that's 2 750 square foot units most likely. And this is our unit in the back over the garages. So that unit is also 750 square feet. All three units are the same size. So this downstairs garage space, you don't get this overhanging section. And what I've noticed is most one-car garages are usually about 10 feet wide by 20 feet deep. So for each one-car garage, you get about 200 square feet of living space. So if you were to convert these three garages, you could add about 600 square feet of living space. That would make probably a really nice one-bed ADU. So someone could look at doing that. All right, so now let's take a look at the location. Okay, so here we are on Google Maps. So you can see the property here. So the city of Lawndale is in the South Bay, but it's going to be one of your interior cities. So it's not directly on the beach like Redondo, Hermosa, Manhattan. But I actually really like these interior South Bay cities for investment because you can buy at lower prices than you can find in the beach cities, but you're still just, a few minutes from the beach and you get all of the same amenities. So actually, if we can figure out how far we are here. So to get to the Manhattan Beach Pier, we're really just a 16-minute drive away. It looks like about 4 miles. Something else I really like about Lawndale is you're close to a lot of major employers in the South Bay. So this is LAX, and right in here is where you have a lot of aerospace companies. So Los Angeles Air Force Base, Northrop Grumman, another Northrop Grumman building here. You also have Mattel. So there's a lot of big companies right in this area that a lot of people will commute into. You have easy access to the 405 freeway here, so you can go up further into LA or down into Orange County. So really a convenient location for somebody and for tenants who maybe are looking for an affordable place to live in the South Bay. Zooming in a little bit, you can see the property is right off Hawthorne Boulevard, and Hawthorne is kind of the main drag through Lawndale. So you'll have a lot of shopping and entertainment along this street. So you can see a lot of the little, a lot of the stores on the map here. And if we look at the property on street view, you can get an idea for the neighborhood. So this is our subject property. Looking back this way, so that's Hawthorne Boulevard. So we can jet out there really quick. So you get an idea of what this street is like. So you have little strip centers like this kind of up and down the street. There is this central parking, which is pretty nice. Looking back in this location, that's your 405 freeway. And then going back into the neighborhood, there's our property again. This is that little park that was in the photos on the listing. So you're right across the street from that, which is kind of nice, especially because this building doesn't have yard space. So you can kind of use the park for that if you have kids or dogs or anything. And then going up the street, it looks like this neighborhood is primarily single family and small multifamily buildings. So not a bad neighborhood. And you can see just how close you are to city of Redondo if we go back to the map here. So Inglewood Boulevard is what separates Lawndale from North Redondo. So really just a couple blocks from being in the city of Redondo. And again, just really not far at all from Manhattan Beach and a lot of these really cool South Bay beach cities. Okay, so now that we've seen the location, let's take a look at the numbers on this one. Okay, so this is my pro forma for this property. Right now we're on the inputs tab, which is where you plug in all the property info. So you have purchase price here, some property details. Down here is the unit mix, current rents, and these are my estimates for market rents. So 2,400 I think is totally doable for 2-bed units in this neighborhood. If you did more of a deluxe renovation on these, I think you could get even more than that. And then I also have some garage rent down here. So you could charge additional for the garages. For financing, I'm assuming a 30% down payment, and we're gonna do a 7.5% interest rate on this one just to start out. This is the type of loan that you'd probably see if somebody was buying this without the intent to live there, so more as an investment property. Investment properties are gonna have slightly higher interest rates, and they're gonna require at least 25% down. So if somebody wanted to live in this property, they could put less money down and probably get a better interest rate. And then if we go over to the summary tab, you can see what the numbers look like. So One of the metrics that I focus on a lot is gross rent multiplier. So with low rents, this property is it's sold at a very high gross rent multiplier based on current income. If you look at market rents at 12.2 times gross, this actually turns out to be a pretty decent deal. This one sold at $489 a square foot and $366 per unit. And if we scroll down here, we can see what the numbers look like in terms of cash flows. On the right here, these are my operating expenses. These are just estimates, but you can see there's expenses for taxes, insurance. We have a repairs and maintenance budget in there. We also have property management, utilities, and pest control and gardening. You shouldn't need city permits because this is under 4 units. And in the annual operating forecast section here, you can see what our cash flow looks like. So if we're looking at the current rents here, so we know the current rents are low. This is our total for the year. So this property would bring in $56,100 in gross rents, less our vacancy expense here, and less our operating expenses, which are from this section here, and then less our debt service. So we can see this property is going to be negatively cash flowing about $28,000 a year until we can get rents up to market price. So once we get rents up, potential rent on this one is $86,000 plus the $3,600 for our garages. So if we take out our same vacancy expense, our same operating expenses, and our same debt service, we can see that this one would be cash flowing once it's at market rents. And something I didn't mention earlier, this loan is actually going to be interest only. So with these interest only payments, your debt service is actually going to be quite a bit less than you would have if you were doing a fully amortized loan where you're paying down the principal balance. So let's change things up here and let's look at what this might look like if you were going to owner occupy it, put 20% down and maybe get a little better interest rate. And with an owner occupied loan, this would be fully amortized. So you'd be paying principal and interest each month. Okay, and if you're planning to live there, you're probably gonna manage it yourself. So we can take out the management expense. And we can see cash flow is gonna be a bit less. So right now the property would be negatively cash flowing about $522 a month. But keep in mind, we do have a vacancy expense and a repairs and maintenance expense. So if we back those expenses out, it looks like this property is just about breaking even. So someone could feasibly buy this property with 20% down, renovate the 2 units that they're not gonna live in, get those units rented out at market price, and then live in this 3rd unit and basically pay, what it would cost them to rent an equivalent unit. And they're going to be able to live there for much less than they'd be paying if they were to buy a house, let's say. And then they can sit on this property, live here for a few years, and then move out and rent it out and keep it as an investment property. So overall, I think this could work as either an investment property or for somebody who's going to do that house hack that we mentioned. Let's take a quick look at what this would look like if we added an ADU. So if we converted these 3 garages into a 1-bed, 1-bath ADU, and let's say it rents out for $19.50 a month, let's look at what that does to our cash flow. So now our cash flow is significantly higher. So if we add back in our expenses for vacancy and repairs and maintenance, we can see the property is still cash flowing about $975 a month. And let's see what it looks like if we add back property management. So if somebody were to convert these garages into an ADU, this property would be cash flowing about $5,300 per year. But I think the real benefit is actually in the equity gains. So I think this property could resell at a gross rent multiplier of 13.5. And if you don't understand that, check out my video on gross rent multiplier and how to use it. So if you were to sell this at 13.5 times gross based on our new market rents, that would give you a property value of $1.48 million. So you'd be increasing the property value by $382 grand. Granted, there are some expenses that come along with that, ADU is probably going to cost 80 to 120,000 to do that conversion. You're also going to have renovation expense for those 3 existing units, but it's going to be a lot less than 382 grand. So there is a lot of upside on this deal for somebody who does want to take this on and convert it into a 4-unit. So overall, I'd love to hear what you think about this deal. If you got any value from this video, please leave me a like and subscribe. I'm trying to put these videos out frequently. So if you have any properties located here in LA or Orange County that you'd like me to analyze, I'd love for you to send them my way. Thanks so much for watching. And remember, invest well, trust Cody Charnell.